Good evening, everyone. Welcome to the channel. Today I am going to talk about Chalieco, interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. And China Aluminum International Engineering Corporation, Limited, offers a diverse range of businesses and services across various industries. These include technology and engineering services for non-ferrous metals equipment manufacturing, including customized metallurgical and processing equipment, engineering design activities in energy, chemical, and environmental protection sectors, geological survey and building construction services, engineering and construction contracting services for plus housing construction, plus highways, plus building materials, plus electricity, plus water conservancy, plus municipal utilities, plus steel structures, plus metallurgy, plus aluminum, plus chemical, plus mining industrial automation systems, mine safety monitoring, and emergency response intelligent systems. The significant increase in Chalieco stock price. A complex puzzle. Chalieco's stock price has seen a remarkable surge of over 53.85% in the past year, but what has driven this increase? While there is no single news event that can be pinpointed as the cause, several positive developments have contributed to the company's rising fortunes. In September 2024, Chalieco's shares rose by 4% following aggressive Chinese stimulus measures and a major contract win. This was followed by a 7% increase in July 2024 due to expectations of a return to profit. Projections for 2024 indicated that Chalieco would turn a profit, thanks to growth in its industrial EPC business, cost reduction, and lower impairment losses. A significant capital injection of RMB 2.29 billion from new investors in November 2024 also boosted investor confidence. However, more recent financial reports have highlighted year-on-year declines in net profit and operating revenue for the company. Despite this, Chalieco's stock price continues to rise, suggesting that the market is optimistic about its future prospects. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth. The company's revenue has grown significantly due to various factors. Overseas contracts have seen a substantial increase of 284.22%, while newly signed industrial contracts and equipment manufacturing business have also contributed to the growth, with increases of 37.68% and 46.2% respectively. The EPC general contracting and engineering business has experienced steady growth, driven by investments in infrastructure and civil markets, as well as the development of strategic emerging industries such as photovoltaics and new energy vehicles. Additionally, the company's design consulting sector has seen a slight increase of 0.03%, while the equipment manufacturing sector has grown by 46.2% due to strengthened scientific and technological innovation. The expansion of overseas business markets, promotion of technological achievements, and implementation of key overseas projects have also contributed to the revenue growth. Revenue decline. On the other hand, the company's EPC, project general contracting and construction revenue, has declined by 41.2%, while design consulting revenue has increased, but is a decline in the context of other segments increasing. Other operating activities revenue has also seen an increase, but this is a decline in the context of other segments growing significantly. If net income and profit margins overview, the company's net income experienced fluctuations over the period, with significant increases and decreases. Initially, net income increased by 21.56 percentage points from -10.72% to 10.84%. However, this trend reversed on page 36 due to business transformation and withdrawal from non-principal businesses, resulting in a decrease of 17.57%. The net income continued to decline, with decreases of 12.4% on page 142 and $31,828 on page 290. Profit margins also underwent changes, with both increases and decreases observed across different sectors. On page 33, profit margins increased due to the design consulting sector's significant increase in gross margin and EPC, project general contracting sector's improvement. Conversely, comprehensive gross profit margin decreased by -1.26 percentage points on page 3. The operating profit margin decreased from 2.9% to 2.4%, while net profit margin decreased from 1.9% to 1.7% on page 142. The company's performance varied across different sectors, with the EPC project general contracting and construction segment achieving a high profit margin of 99.8%. The design consulting segment had a profit margin of 100%, while the equipment manufacturing segment had a lower profit margin of 98.9% on page 284. Overall, the company's net income and profit margins were influenced by various factors, including business transformation, sector performance, and market conditions. The company's ability to generate positive operating cash flow is a mixed bag. While there are instances where it has successfully generated positive operating cash flow, pages 58, 244, and 310, there are also times when it has reported negative operating cash flow. This inconsistency raises questions about the company's financial stability and its ability to sustain long-term growth. The company's debt level and interest expenses have undergone significant changes. While the total borrowings decreased by RMB 0.229 billion, the gearing ratio increased from 42.82% to 44.03%, indicating a slight increase in debt levels. However, net debts have increased by 5.9%. On the other hand, interest expenses have generally decreased, with notable reductions of RMB 24 million period on period, and from RMB 157,163 to RMB 132,767. Nevertheless, interest expenses on perpetual bonds led to an increase of RMB 75,657,000. The company's financial performance reveals a mixed picture across its various segments. On the positive side, the design services segment and equipment manufacturing segment have performed well, contributing positively to the company's overall revenue. In contrast, the EPC project general contracting and construction services segment has struggled, indicating areas that require improvement. In terms of regional performance, no specific information is provided in the summary. However, it can be inferred that these segments' performances may vary across different regions. Management is optimistic about the company's outlook due to enhanced remediation effect and international leading level of complex terrain tailings storage system technology. The company aims to build a comprehensive competitive advantage through technological innovation, refine operational development, focus on core areas, and drive innovation and breakthroughs. Key initiatives include accelerating project management reform, strengthening guidance and supervision, and implementing a project guarantee and sponsorship system. The company has a history of paying dividends to its shareholders. This is evident from the numerous references to dividend payments in the financial summary. However, there is no mention or indication that the company has bought back shares. Concerns about inventory buildup and supply chain disruption. The financial summary highlights concerns regarding inventory buildup, indicating a potential issue for the company. The data reveals a significant increase in total inventories by 6.7%, with raw materials inventory rising by 76%. Furthermore, on page 247, it is noted that raw materials inventory increased by 22%. This accumulation of inventory may signal supply chain disruptions or inefficiencies, warranting further investigation to mitigate potential risks and optimize operations. That concludes the financial summary for Chalieco. Feel free to comment below, and I will be happy to answer them when possible.